Hi, everyone. Welcome to this session. So in the realm of risk management, there's a full of challenges and innovations. And we are also standing at the crossroads of a very dynamic as well as intricate landscape. So I have the privilege to welcome all of you to this insightful panel discussion that center around how AI is and will be helping the risk management. So I'm today's discussion leader. My name is Kathleen Lee. I'm the head of data science, analytics, and the risk at Extend. So Extend funded in 2019, and we are a rapidly growing fintech company that's specialized in product protections and shipping protections. So in terms of my background, I previously held and lead risk and analytics efforts at banking organizations such as Barclays and Wells Fargo. I also, in my previous role also includes helping scale up the fintech company into IPO, which is a BNPL player, a firm. So I'm super honored and excited to sit with four industry luminaries today. And now I'm going to pass on the mic, have them to do their self-introductions.
Okay. Hi, I am Fabian Serrato, Senior Vice President of Model Data Risk in Scotiabank. Scotiabank is one of the biggest banks in Canada. We have also a big presence in Latin America and the Caribbean. Thank you for the invitation. Happy to share my thoughts about AI in the industry.
Agus Sudjianto, I'm the head of corporate model risk for Wells Fargo and overseeing all model development and deployment for the entire enterprise.
Rick Hamilton, PNC. I am the AML data science solutions. We build and deploy the models we use to try to detect bad actors.
So I'm Phinean, Gardner. I'm the Chief Analytics Officer for Teradata Financial Services. So I'm going right back to Teradata. Last 4 years, we made AI and also makes too. That's our first function to go. This is the founder of the last software opens exam. So software is back at Teradata to help evolve the data strategy.
Awesome. Thank you for all our amazing panelists. So because there's some mic issue, I just wanted to double check everyone can hear us clearly, sure. Especially the back. So? Okay. Great. I also would recommend if you are sitting in the back and cannot hear very clearly, you can just move up front. There's a lot of open seats. Cool. So it sounds like we all have very diverse background, but for some reason, all of us basically have been or used to work in a banking organization before. So I think we can start a discussion over there. Maybe Agus and Fabian, you guys can talk about how a banking organization has been adopting AI, and if there are some examples can be shared, that would be amazing.
Some of you that probably in the previous session, probably David from JP Morgan talked about how bank use a lot of model and AI, so we have a few thousand model in the company. About 20% of them are machine learning or AI. When we define machine learning or AI very specific, that means they are either deep learning or boosting or any highly parameterized model. So we don't call the traditional statistical model as regression as AI or machine learning. So we're very specific on that. We use it in very, very broad category, both in risk management as well as serving customer, from something very mundane when you lost your credit card, you make a phone call, you get answer your voice, your call will be listened to our machine learning and you detect whether this call fraudulent or not. So various application in banking, including credit decision and a lot of stuff. So when we have a few thousand model, 20% of them, you can imagine the space that we have to do.
Awesome. What about Fabian?
Yeah, in Scotiabank, the main use cases are using machine learning, where we had demonstrated that we had a lead compared with the traditional techniques. It's usually when we had a lot of data, a large amount of data, structured and unstructured. Some use cases are anti-money laundering, fraud, Lastly, we had basically enhanced our credit risk decisions. Most of the US bank or even Canadian financial institutions in the retail side, they rely on FICO score. Using AI, understanding a holistic view of the client, incorporating information such as deposits, transactions. We had now a holistic view of the client, and as a result of this, we had a reduction in our default rates. Similar situation in the business banking side, not only using the risk rating, taking into consideration of the cash flow of financial indicators. So AI has helped us in this direction. And lastly, we are doing some pilots in generative AI, especially in the model cycle, in code generation. That the modelers, they don't like to document their models, so we are using generative AI for accelerating and automating the documentation.
Cool. So I know, Phinean, I think you help, as Teradata, your main goal is to help your clients to use AI or just do risk management in general. So from a vendor perspective, how do you think about it?
Yeah, I think that what we've heard at this conference and what you'll hear today on the panel, I'm sure, and what you'll hear as we leave this conference is it's all about the data, right? Data quality is the long pole in the tent, right? So high fidelity AI is all about the data. Your model is only as good as your data. Well, Teradata has been doing this for decades, right? Helping customers capture and organize data. And so the real opportunity is to help customers build on that being data-driven to now what we call signal-oriented. So in a data-driven world, you want to store once, you use many. In a signal-oriented world, you generate once and distribute many. So the idea is really a really simple equation, which is data equals features equals model equals signal. So the idea is that you want to produce the richest signal and distribute that to as many applications across different functional areas of the business. And so to produce the richest signal, state-of-the-art models need to be fed the richest set of features that are derived from the most curated sets of data. And so Teradata's strategic ambition is to really create an open and connected framework where we can simplify and accelerate the process to generate these signals and then get these signals into the application workflows at scale.
That's awesome. I guess that's where the Teradata name also coming from, sort of?
It predates me, so yeah, I think
you're not taking the credit. Cool. So, Rick, I know you are, mainly managing AML, and it has a lot of intensive experience on that. So, would you like to also comment a little bit around how did you, use AI and risk management for that?
Yeah, so the title of this is how do you take the risk out of risk management? Is that so if you think about what is risk management, and it's all about risk return, right? So it's not about not doing things; it's about doing things with eyes wide open in terms of what the risks are. I work in the independent risk group. Our job is to make sure people's eyes are open, right? We're not on the revenue side, but we're on the risk side of the transaction. With an AML, the mandate, it's a national mandate for anybody who moves money. We have to look for bad actors. And so we figured out in 2017 that the traditional rules we use to find bad actors, it kind of hit their limit in terms of efficiency versus effectiveness. So we started adopting machine learning. So in 2017, we first proposed we should use machine learning, which today that seems rather mundane. Back then, it was sort of eye-opening for people to even contemplate putting a machine learning program into the compliance space. Fast forward to today, we have probably 95% by the end of September, 95% of our alerting will come from machine learning. So it's been a it's a very slow adoption process. So one of the things we learned is go slow, steady, make it work. Don't try and rush. Second thing was get it into production as fast as you can. So once you know what's going to work, once you know you've got something usable, get it into production on a small scale. So that this thing keeps cutting out of me. So that you can monitor it. It does a number of things. One, it gets it into your budgeting process. So if it's in production, you're going to budget for it the next year. People get accustomed to seeing it, so they become comfortable with it. And you get a chance to refine it over time. If it sits in test, if it sits in a development environment running in parallel, it can often be forgotten because the tyranny of the immediate will often take your attention away from those long-term strategic goals.
I love that. I love that you also share your learnings and, how did you overcome some of the challenges?
What about you, Kathleen? You're in a very specific industry. How do you apply AI in risk management?
Yeah. Thanks for asking for that. So, as I mentioned, I am the business that I'm in actually offers product protections and shipping insurance. So, it's unlike some of the banking, lending companies where you guys might try to minimize the risk or eliminate some of the risk, right? Based on credit history, profile, ability to pay. So, for us, we don't try to eliminate the risk because if there's no risk, there's no value in providing the product that we're providing, right? So imagine that I purchase a product and everyone purchases a product. If none of those products will ever break or getting damaged or getting stolen or lost, there's no value to provide a product warranties. So for using AI can actually help us to size the risk, to predict the risk as well as create operational efficiency for it. So one example that I always love to share with anyone that doesn't know too much about our business is for one unique thing is about, maybe banking has so many transactions happening every day. We actually received, millions of records in terms of what the product is, with those product titles and product prices from the partners that we work together with, right? So how do you know that just from those product names and the price or potentially category to know what exactly is that product? Is this a laptop with a name of some brand and then some uniqueness, or is this like part of the tools that you will buy to repair your car, etc. So we in 2021, my team actually started to develop a linear SVC model to try to use the distance between vectors that transform from attacks. So the model actually performs, well. It gets us to about 90% accuracy rate. And then with, a couple iterations, it gets a little bit even better. And it greatly reduced the operational, some of the manual operational efforts that we need to spend hiring agent for just understanding what that product is, right? And then with the popularity and then the trending thing happened about large language model, my team actually started to explore through some of the open source large language model online. We tried BERT, we tried a couple models from Hugging Face, and then we also tried OpenAI's ChatGPT. And then we actually found the latter has a higher accuracy. It helped us to get to about 95%. But the one thing is that because we have so many products, as I mentioned, we don't want to just keep sending OpenAI money, right? Because we're using their API and pinging them. So one area of specific interest that we're focusing on is how to reduce the token sent and the received from OpenAI so that we can maintain the high accuracy while reducing the cost. So another area is, I'm assuming that most of you have experiences around fraud, right? How to use AI from fraud. So for us, we have fraud as well because customer can potentially abuse our product. We found some people from like Miami, Florida, no offense to Miami, but they bought 7 products in 2 weeks, and then they just submitted claims and claimed that the package never came in 2 months. So we are using definitely building models to greatly to predict someone's fraud risk based on the claim submission, based on the velocity coming from their transactions, as well as their transaction behaviors. But in the meantime, we're also heavily thinking about how to use generative AI as well as some of the new models in the market to uncover some of the relationships that's harder to find just using the claim reasons they submitted, using some of the social footprint from the specific user to make our model even more accurate. Cool. So I think we can get to the next part of the discussion, and some of you actually shared as well, is around the challenges that you have seen from implementing AI into your system, especially, most of our speakers today are working in very large organization, right? And what are some of the methods you guys take to overcome those challenges, and what are some of the learnings that you want to share? Who want to go first?
I'll jump. I think you can all hear me. I'll try and use this. So I'll jump in. So I hit on a couple of them. I think, this was an interesting experiment for us because we started adopting machine learning at scale in one of the most conservative areas of the bank. So compliance is one of the most conservative areas. I'm not a compliance guy. Most of my background was in interest rate risk management, capital management. This is a new role for me. So it was kind of a tall order, and we very quickly said the first thing we have to do is identify every stakeholder, and we need to listen to them, explain what we want to do, and listen, and do that over and over and over, even to the point where it got probably a little pedantic for people, because it allowed people who didn't understand what we were doing to start to get some comfort and appreciation for what we're doing. And then the second thing I'll note is just the data. The data side of it was 80%. So Teradata helped, but because we're a Teradata shop. But spending the time understanding that data, transforming the data so that we could use it in the model the way we wanted to, checking to make sure that all those transformations was correct was easily 80% of our work. And it was not perfect in the end. We didn't do everything we wanted to do. But we got far enough such that we felt we de-risked the project enough to make it viable to move forward, and it turned out to work pretty well.
I agree with Rick. Our main challenge is for sure data. And I think during all the conferences we have heard about the pain point data. I agree, 80% of our modelers are spending time cleaning the data. So to tackle this, I think that we had started a clear process of data governance, where we had identified clear data stewards, and to ensure that the data is the owners of the organization. So to ensure that we had clear owners of the data. Other important challenge, and Rick mentioned, is to ensure that you educate the business. So you need to over-communicate the product. And start, small, with a pilot. We have a methodology in Scotiabank that we call Champion Challenger. Champion is basically the traditional model technique, and we start with a test where we understand what are the challenges, what could be the possible outcomes, and we have seen demonstrated that it's successful. And we show the organization, we roll out to 100%. So I say data and also test it in production quick, but usually start small and then scale up to 100%.
So, Phinean, from your perspective, what are some of the challenges that you have seen from your clients?
Yeah, so I think I'll open up the discussion around generative AI, right? I think that, as I mentioned initially, I had a distinct privilege of trying to position large language models to large financial institutions prior to the AI stuff. So, all the use cases and understanding workflows. If I think about what I would like to Teradata is like being a really probably that's been around for a while, and a lot of patents. What we're patents we have is respect data structure, which was initially designed to actually convey small relations which are committed to on that scale. So we're actually actively testing this data structure right now to do exactly what it is. So offline. So
one second.
I think you need to bring it closer.
Yeah, that's what I mean. No, so this matrix spec data structure is being tested right now for vector embeddings, and so taking parts of speech and actually converting it to numeric representations, and then storing those vectors and creating optimized indexing and search of those vector embeddings within the Teradata ecosystem, which is extremely important to eliminate hallucinations. As Agus likes to remind me often, that you don't want to wake up on the cover of the Wall Street Journal. And so the bank's ability to actually use large language models and high-risk applications, this sort of capability becomes paramount to being able to do that.
Agus, do you want to share some to close up this question?
Okay. Well, I will use the analogy, a little bit analogy, because I used to design car engine before for Ford Motor Company before I went to banking long time ago. So when we talk about model, all models are wrong, and especially generative AI. All models are wrong. When they're wrong, they can harm people. So when I look at the analogy, is we need people, the people who design the car, need to design the car safely and reliably, and know what they're doing. They know what they can engineer system that will work reliably. So that's one thing. That's the designing model that will work reliably. Even after we have very well engineered car, we can still have reckless driver, untrained driver without driver license. And that is really the model user. In generative AI world, this is becoming a lot worse because we know the model is not trustworthy. And even for information retrieval, very mundane, simple information retrieval, because of the high dimensionality of the factor representation, let's say llama 2 is 4,000 something, like the embedding, and looking for nearest neighbor, it can retrieve wrong information. So if we're thinking about, okay, we're going to put this in banking center for our associate in the banking center to help, to answer customer questions. They retrieve information, they have wrong information, they pass along to the customer. In banking, that's providing deceptive information. It has a law. You do that. You violate the law. So not only that we have to worry about designing engineer vehicle model that fit for purpose. So unlike ChatGPT, that you just put a large language model out there, you don't do something reckless right there in banking. You have to engineer your system to be really, really safe and reliable. Then make sure that your driver are really licensed. So that's what we're thinking about when we're thinking about what are the barriers, what are the problem, not only how to build model and deploy model. We're thinking about the harm that the model will do to the customer or to the company.
Amazing, amazing. I love how straightforward you are with, directly pointing out the concern. So just taking a step forward, what are some of the factors, or how did you approach it to try to eliminate the concern there? And has that been successful?
Yeah, so a few things. Of course, understanding the model is very important. What the decision of the model, what output the model do, that's the really conceptual soundness of the model, that's explainability, interpretability of model. And for tabular data, for structured data, I would consider that as a soft problem. So we released tool out there, open source tool called PyML. You can Google it, Python Interpretable Machine Learning Model. It's how to design model that's inherently interpretable. And this is very important for high-risk application like credit scoring, credit decision. We only deploy a model that's inherently interpretable. So we can make deep learning, we can make gradient boosting to be inherently interpretable. So for tabular data, that's a soft problem. You don't have to rely on made up tool like Sharp, Lime that is really has a lot of flaws. So for high decision implication, we don't use those kind of post hoc explainability tool. We use inherently the model. So that's a soft problem. Now we're dealing with a big model, of course, the gigantic model, 175 billion parameters, 70 billion parameter llama. How do we do it? How do we understand what is the embedding to, how this represents sentences, and how it predict the next word. So that is also something that can be done. It can be done, may not be inherently interpretable, but you have tools that you can do, and also testing the behavior of the model through invariance testing, directional testing, all kinds of stuff that we can do on that. So those are interpretability and testing the reliability of model and how trustworthy the model, how sensitive the model with input corruption and all of those things are very, very important. Today, building model with a lot of open source, a lot of workflow, it's becoming easy to build model. Testing testing model so that you deploy model with high confidence becoming very, very hard.
Yeah, I agree. It's one thing is that you don't know what goes into those large language models, right? Especially if it's open source or developed by a vendor. Second thing is that you really need to think about how much you want to spend or put in efforts in terms of validation. So if I can quantify the efforts there, Agus, from your perspective, what do you think is the right amount or allocation in terms of building model versus validation?
In large language model, typically you will not start from scratch. So you have the foundation model that you start with and you fine tune, or you probably do zero shot. If you want to do information retrieval, you can do zero shot. So depending on the application. So in large language model, you always do start from foundational model. You don't start from scratch. In other area, we build from scratch, right? So how you engineer from foundation model to build something that will be safe and sound. So I think that's the key. And you spend a lot of time, of course, on the testing as well. But I would share with this. In a financial institution like banks, especially on large banks, we have model validation function, independent model validation. So people talk about responsible AI all the time. And I would question very simple. Who is the head of responsible AI for that institution? And what seniority of the head of responsible AI in that institution? Who the person reports to? And what organization the person reports to? In large financial institutions like us, it has somebody like me who report to the chief risk officer, who report to the board directly. So now then you ask question in the industry, who has somebody like that will make a call whether we can deploy this model or not? And you have model validation team. People out there talk about red teaming. Well, financial institution is not only red teaming, they have dedicated people that the job is to break model. For every 3 model developer in our company, they have one person that the job, independent function, report to different group, that the job is solely to break model to show how bad the model is. So I think that this commitment that when we're talking about responsible AI, how much commitment, how much money company willing to spend?
Awesome. So I think that's a great segue into our next topic. It's specifically focused on model reliability and explainability, as well as how do we deal with some of those regulations. So for our other panelists, would you like to also share some thoughts?
Yeah, I think I agree with validation. Model validation is critical. It needs to be independent. But also it's important that you invest in automation, in the validation processes, because you're going to have a bottleneck, and we discussed this, when we are talking about fintech and banking. I think it's important that, because usually we're trying to invest a lot in development, but the validation team is probably forgetting. So in our financial institution, we ensure that they have the same tools and agree that we need independent validation. Interpretability in the financial industry is really important because we are highly regulated. And I think we have something is, chat, line, to try to understand the attributes of the models. But sometimes you need to do the balance between predictability and how you can explain the model. And sometimes you don't choose the model that is most predictive. It's the model that you can explain to the business, that you can explain to the regulators, but also over-communicating with the business, is to ensure that they understand the model, that they understand the attributes, and have an open communication. I think it's critical in the process of model explainability.
I'll pick up on what you were talking about in terms of explainability. And it also depends on how it's being used. So when you are talking about pricing of loans, you're talking about credit adjudication, decisioning that affects an individual, explainability is absolutely paramount, meaning I know exactly why the model said yes or no. When you get into other areas like financial crimes, explainability has a different interpretation. And it's not so much I know exactly which features drove, and I know the weights on the features that drove a customer to be signaled for an alert. It's more about, can I tell the investigator what aspects of the transaction activity that we're promoting for review you should take a look at. Where do you go look? Because there's a lot of transactions typically. So it's finding the features that explain that. The key for areas like fin crime is, can you prove it's working? Because the key, we all have to set risk tolerances, and we have to just prove through monitoring, rigorous monitoring, that we're hitting our risk tolerances. And so long as we're hitting our risk tolerances, we're catching enough bad actors, and the investigators know how to use the results to go do an investigation. We've covered off on explainability, which is a much different standard than you would do for underwriting. And so I would say that's something else to contemplate within your organization. What level of explainability do you need for that particular use case?
So I think where I'll go with this is to say that model bias, model explainability, interpretability, robustness is all traced back to features and data, right? So you can tell I've rehearsed this a few times with my kids at the kitchen table, which is keep it simple. Data equals features equals model equals signal, right? So if features are derived from that data. So when you think about it from a Teradata perspective, what we're trying to do is threefold. One, continue to innovate around the data and feature engineering you can do natively within the database. Two is really create the open analytic framework, which allows you to bring in language or tool of choice, whether it's an H2O or Python, directly into the database to do those transformations. And then three is really kind of containment. So we talked about data governance, right? You put a lot of control over your data, especially in a Teradata environment. But yet that data then in a large enterprise could go to 5 or 6 different development platforms. And they have feature stores, and that's where you're building your features, and then you're training your models, right? So I kind of make the comment to folks that I talk to, which is, if you put so much control in the data, but then you let the data go elsewhere to then create features, are you actually kind of creating more single points of failure, right? And so ultimately what we're trying to do is say, hey, if the data in the app are connected to Teradata, then your feature and your model should be connected to Teradata as well. And so we have a native feature store, we have native capabilities for model orchestration, and then obviously all the open and connectivity to the different platforms that you would choose. So again, really simplify and accelerate your ability to generate these signals and then get them embedded into these applications. And that's really kind of what fascinates me. If you really think about deep learning and in the moment and symbolic reasoning and the application of signal to interaction, then you're really talking about how do I lower latency, how do I improve, lower risk and improve quality. And that's really about consolidating these into an environment like that.
Great. So I think our one last topic will be the risk excitement. We know that the finance industry actually evolves very quickly, becomes more and more digitized. So for our speaker today, what do you think is the goal of AI in the future? What are some of the cool ideas that you guys have in mind, haven't tried, but you're thinking about trying?
I can start. Of course, we are transitioning from data scientists try to push to the business in idea of using model. Now it's the other way around. Everybody want to use with the generative AI. Everybody want to have you have AI on their tool, and the application of that mostly are very, very mundane information retrieval and Q&A, I would say very unsexy application, but that's the most application is really information retrieval and no more than that. So that's massive, right? A lot of, because the bank is so much documentation and information and things like that. So that's very, very widespread on that. And but at the same time, it's trying to tame the expectation because people have very high expectation about this, and people will get disappointed on this. Yeah, given all the hype and all those things, they will get disappointed when it comes to reality. But the application is there, and then the nature of the hallucination of this large language model. That's, by the way, I don't think it will be curable. I don't think there is any fix on the hallucination. So the key, if you want to use it, how can you let using it in creative way to let the model hallucinate and take advantage of the hallucination? So I think that will be the exciting piece. For example, in Rick's world, maybe let the large language model to generate scenario to do money laundering that never done before, or to generate fraud that has never done before. So the risk manager can think about what can be done, what can happen. So I think that's just really using the nature of model that hallucinate to generate creativity, to do what-if analysis. I think that will be the exciting piece if you want to use this model appropriately instead of using this model wrongly. Because today, when you ask ChatGPT to give you fact, you use the model wrongly. So you should ask this type of model to do it rightly, which is let it hallucinate.
I'll add different perspective because I can't answer your question because I'm not smart enough to know where things are going. It's one thing I've learned in my years. I'm not that smart. So, but what does seem to me to be the thing that organizations will almost certainly do is adapt to the fact that they need to use models. They will want to build some, they'll want to buy some. But they have to create a culture that knows how to build source data, build models, deploy them, and support them. And that means creating a culture where people are very comfortable creating models. And you could democratize the development process and push that out into the businesses so you can be more rapid and responsive to what the business wants. So business leaders, and that's a generational thing, they'll become more and more comfortable with the role of models in their business. I would expect they'll be embedding people in their businesses who can build models under a central governance framework that can be rapidly deployed and maintained. So to me, it's less about where it is going because you can't predict, but everybody needs to have that kind of a fabric in their organization to be able to take advantage of the potential that these offer.
Just to complement, don't be afraid of using AI. AI will change the way that we work in risk management. And it's going to change the way also that people interact with banking. I don't expect a lot of people going to the branches, maybe for big decisions such as mortgages or investments. But even today, we have trading algorithms that are providing better advice than some brokers. And I think it will be a big transformation, and we will start to talk about open banking, where AI help us, or will help us to make real-time decisions in terms of pricing, in terms of offers to our clients. It will be critical. Also, in a global organization such as, you need to talk with the regulator because they are learning, So you need to be with them, the future agenda of AI. I think is really important. I think Europe is a little more advanced than the rest of the countries. But I think it's important and take advantage of the boom that we have in AI now, because you have the power of transform your organization because the leaders are listening to you.
I guess the last thing for me is just really the scale side of it. I think that's really going to be extremely, as AI becomes more pervasive and you look to get these signals into your fabric of your organization, it's going to create this tremendous surge in workload, right? And how do you start to manage that in a way that manages the risk but also ensures the quality? I think is super fascinating. It's almost like data warehousing 40 years ago. Now it's going to be about warehousing for the complex event processing for signal-oriented architectures. So I think that's really exciting.
Great. Just adding on to that, I think two specific examples I can think of that one of you, I think you talked about high level, but just instead of thinking about how AI uses to do this model, we can also think about how AI generated cases. For example, like for fraud, right? Generate just synthetic fraud. Try out in the models and just to validate whether the model works. It could also, I know a lot of it is about like language, about text, but also about using image. I see this picture, this is generated by Midjourney. But one example that particularly really related to my business is understanding picture that consumers send to us on the damaged product, right? We use that to automatically feature and understand whether this is legitimate or not. Okay, so we're about at time, but just wondering whether one of you have any last thoughts that you wanted to let the audience know.
And once.
Okay. Thank you
Thank
so
you.
much for